So you think moving to Longboat Key is just about affording the house. Everyone says that, and they are wrong. In 2026, the real cost isn't the glamorous sticker price. It's the 5 other numbers that can turn your Florida dream into a financial nightmare before you even unpack. You see the stunning sunsets, the waterfront mansions, and you think you get it. But trust me, the price of the house isn't what will stop you from living here. It's the shocking cost of insurance, taxes, and fees that most people never see coming. My name is Gina Ursini, and I am a real estate professional right here in the Longboat Key market. My clients are constantly asking me what it really takes to live on this island, and the answer always surprises them because it's not just about having millions in the bank. It's about understanding the brutal math of what it costs to simply carry the property. Now, in this video, we are going to pull back the curtain and we're going to break down the shocking numbers, the real numbers of what it costs to live in Longboat Key in 2026. By the end, you're going to have a clear picture of the total monthly expenses, and you're going to know for sure if this is a smart move for you or a financial mistake waiting to happen. First things first, let's talk about the price of admission. When you look online, you might see a median sale price that seems to be around 1.1 or 1.2 million. Now, that number can be seriously misleading because it lumps everything: small condos, older inland villas, and properties nowhere near the water. So if you're dreaming of a standard single-family home, not a brand new palace on the Gulf, but just a nice remodeled place on the island, then you're going to need to adjust your expectations. In today's market, a realistic starting point for a single-family house is in the 1.4 million to the 1.8 million range. And even that isn't directly on the beach. For anything with premier Gulf front views, you're easily looking at over $5 million. Now, while we've seen inventory climb a bit, giving buyers some breathing room, the supply of desirable single-family homes on this 11-mile island is still limited. Now, that scarcity keeps prices firm. So, for our breakdown today, let's use a conservative example: a $1.5 million single-family home. It's a realistic entry point for many out-of-state buyers chasing the island life. But as you're about to see, that 1.5 million is just the beginning of the story. Now, let's talk about the mortgage. A few years ago, with interest rates in the low 3s, the payment on a high-value home was much easier to stomach. But 2026 is a different world. While forecasts from groups like Mortgage Bankers Association and Morgan Stanley suggest rates might stabilize, we're still looking at a higher rate environment. For much of the year, let's use a rate of 6.5% as our example. Now let's run the numbers on our $1.5 million example home. Assuming you put 20% down, that's around $300,000, you're left with a loan of around $1.2 million. On a 30-year fixed loan at 6.5%, your principal and interest payment alone is roughly $7,585 per month. That is just over $91,000 a year just to cover the loan. This is the first reality check for many buyers. The monthly cost to finance a home here is often double what they might be paying for a similar size house back home. But believe it or not, this is one of the more predictable costs. The real shocks are hiding in the next few expenses. If there is one single factor that will make or break your ability to afford Longboat Key in 2026, it is insurance. The cost of homeowners insurance in coastal Florida has become the defining expense of homeownership. And it's the number one reason I see buyers walk away from deals. Now, while rankings can shift, Florida consistently ranks among the most expensive states in the nation for homeowners insurance, with averages that can be several times higher than the rest of the country. Now, on a barrier island like Longboat Key, those numbers are in a different stratosphere. For a higher risk single-family home, now think older construction or direct Gulf front frontage, it's not uncommon to see combined annual insurance bills ranging from $12,000 to $35,000 a year. Now, that could be an extra $1,000 to $3,000 per month. For some properties, I've even seen quotes exceed $40,000 a year. It just depends on the size of the home, the location, etc. This cost is usually a combo of 2 or 3 policies. First, it is your standard homeowners policy, which includes wind and hurricane coverage. That wind portion comes with its own separate and very high deductible, usually 2% to 5% of your home's insured value. So on our $1.5 million example home, a 2% deductible means you're on the hook for the first $30,000 of damage in a hurricane before your insurance even kicks in. Next is flood insurance, because virtually all of Longboat Key is in a flood hazard area. It is mandatory for anyone with a mortgage to have flood insurance. Now, depending on your home's elevation and your flood zone, this can add another several $1,000s a year to your bill. You absolutely must get actual insurance quotes during your due diligence. Do not rely on what the seller is paying. Your premium as a new owner may not be the same. The next hidden cost that catches buyers by surprise is property taxes. Florida's statewide effective property tax rate is actually below the U.S. average, but that statistic is misleading here. On Longboat Key, you can expect to pay property taxes of around 1.5% of the purchase price. One of the unique twists is that Longboat Key is split between two counties, Manatee County to the north and Sarasota County to the south. The town sets its own tax rate, but the total millage rate you pay depends on which county you are in, creating 4 different tax zones on one small island. Let's go back to our $1.5 million home. For a non-homesteaded property, which means like a second home, the assessed value can adjust quickly to the purchase price. A conservative upper-end estimate for your annual property tax bill on that $1.5 million home would be between $22,000 and $23,000 a year. That's another $1,800 to $1,900 per month. An example calculation for a $2 million property showed on an annual tax bill that could be around $30,000. This is a significant recurrent expense that you have to factor in from day one. If you're thinking of a condominium to escape some of these costs, well, not so fast, because while the purchase price might be lower, you are walking into a different beast here: condos and HOA fees. On Longboat Key, these are not trivial. For many desirable waterfront and luxury condo buildings, monthly fees can easily range to about $1,200 to over $2,500 a month, with some I've seen even higher. These fees cover the master association policy for the building, landscaping, pool maintenance, and security. But the landscape for condos in Florida has fundamentally changed. After the Miami tragedy, new laws now require condo associations to conduct structural integrity reserve studies, which is also called SIRS, and to fully fund their reserves for major repairs. Associations can no longer easily waive funding for big ticket items like a roof replacement or concrete restoration. While this is a critical safety measure, it had a massive financial impact. Many associations found that they were underfunded, forcing them to hike monthly fees or to levy huge special assessments on owners. It is no exaggeration to say that some owners have been hit with hefty special assessments. When you buy into a condo, you are buying into the financial health, or the lack thereof, of the entire building. A low HOA fee might look appealing, but that could be a red flag for a massive bill looming in the near future. The final cost people consistently underestimate is what I call the salt air tax. That beautiful coastal environment we all love, the sun, the salt, the humidity, it is relentlessly trying to destroy your home. Metals rust, paint peels, AC units work overtime, and they need to be replaced far more often than they do inland. A common rule of thumb for home maintenance is budget 1% of your home's value annually. So for our $1.5 million home, that's $15,000 a year, or $1,250 a month. But on a barrier island, I tell my clients that's just a starting point. For older homes, you might want to budget 2%. That would be about $30,000 a year, or $2,500 a month. This isn't for just fun cosmetic upgrades. This is the money you need for the inevitable, like replacing a seawall, maybe a new hurricane-rated roof, or a new window system that was corroded by the salt spray. Ignoring the sinking fund is a recipe for disaster. So let's pull it all together. We started with a $1.5 million home. We talked about the mortgage, insurance, taxes, and maintenance. Now, where do we land? Let's add it all up using our conservative, even low-end estimates for the big ticket items. First, you have principal and interest, that it was $7,585 per month. You have homeowners and flood insurance, which is around $1,500 per month. You have property taxes at $1,800 per month. and maintenance, which is $1,250 a month. And that's based off of our 1% guideline. When you add all of that up, the true monthly cost for our sample home isn't just the mortgage. It's approximately $12,135 per month. And that's before you pay for electricity, water, landscaping, or any other normal costs of living. This is the number that really determines if you can afford Longboat Key. So, can you actually afford Longboat Key in 2026? As you can see, it's complicated. For those who come in prepared with their eyes wide open, it absolutely can be the paradise it appears to be. Now, this video isn't meant to scare you away. It's meant to prepare you. The reality is that for many out-of-state buyers, the monthly cost of homeownership here is a staggering jump. But if you have the financial foundation to handle these numbers and you budget for them from day one, you can make an informed, confident decision. Next, you're going to want to go check out my next video on what $3 million really buys you on Longboat Key.